A very good morning and a very warm welcome on board. This is our part two on special demand for the 100 MCQs. And this is your faculty, Rashad Hussain. We've done 50 MCQs in the previous session. And now here we are with the rest 50. And let's head straight. And this is your question 51. Your question 51, which is based on valuation, where we are supposed to find out the current share price of Kant company using dividend valuation model. And this question here is what method are we supposed to use? Dividend valuation model, or otherwise, which I generally call it as a discounted cash flow. So we've got year one, there is no dividend. Two, there is dividend. Third, there is dividend. And then after the third year, from fourth onwards, the dividend is going to grow, or is it increase by 3% per annum in subsequent years, which means it is 4 onwards to infinity. Your discount factor is supposed to be 10. The cost of equity is considered as discount factor. And come on, go ahead. I'm looking forward for the answers in the chat box. Yep, you've got to be really quick. This is a past exam question, which is also available in the various kit. I believe it is there in the BPP kit as well. Okay, hurry up, hurry up, hurry up. And here we go 1, 2, 3, and 4 onwards, infinity. And what is the cash flow? Nothing in year 1. And year 2 is 0.25. Year 3 is 0.50. And then that 0.50 is going to increase by 3%. The discount factor at the rate of 10%, 0.909, 0.826, 0.751, and here it is 0.10 minus 0.03 into the previous year discount factor 0.751, and discounted cash flow point 0.25 into 0.826, which is 0.2065, 0.5 into 0.751, 0.3755, 0.5 into 1.03, 0.07 into 0.75, 5.525, and the total is $6.107, and that tends to be this one. Good. Very good. Happy to see that many of you have got the answers right. And those who have not, please be prepared for a question like this. This sorts of question are very important. So what is done here in the fourth year is this particular concept where P0 is equal to D0 into 1 plus G whole divided by KE minus G into, if it doesn't happen in the first year, previous year is compacted. So here this is D0 and this one is 1 plus G. Here it is KE minus G and this one is the previous year, it is compacted. This is what is done. Moving on to question number 52. Yes, please try solving this question, question number 52. And as soon as you get the answer, let me know through the chat. If you're stuck also, let me know through the chat. So that will let me know, okay, probably, I will explain this a little bit more. EAC, what is the formula for EAC? EAC is equal to, I keep saying present value or otherwise net present value divided by the annuity factor. So you've got to get the net present value right. Preferably use a spreadsheet so that you can save a lot of time. Okay, here let me do it for you. So it's 150,000 initial, then 5,000, 8,000, 25,000. So what is the initial one? Initial one is 150,000. Then it is 5,000 for 3 years. And then it is 8,000 for next 5 years. And the last year it is 25,000. Now here it is 1 divided by 1.2 to the power of that year. Copy paste will come in the same order. I've got the NPV ready and the NPV which I will compare it with the annuity factor. For convenience, I'll give the sum of all of these as count factors to get it, and this divided by this is my EAC, and rounding it off to the hundreds. Rounding to hundreds as specified will give me 43,900. And which option is 43,900? It is option B, which is 43,900. Okay. Now, why this question? Why this question has come up? The reason why this question has come up is that many students have done mistake. Especially they got confused when they saw this point in the question, which mislead them. What point? Are payable on the last day of the year. So what some of them did is that, what mistake some of them did is that instead of 1:3, they wrote 2:4. And this one is wrong. Instead of what is it, 4:8, they wrote what is it, 5:9. Okay, this is wrong, and this one is the correct one. Last day of the year is that year itself. The last day of the year is that year itself. Now, to make you understand that, what is during year 3? End of year 3. Beginning of year 3. Tell me which cash flows, where the cash flows will come. Beginning of year 3 is correct. Beginning of year 3 is 2. During year 3 is 3. End of 3 is 3. Okay. So this is how you need to read the cash flows and adjust the cash flow for the appropriate year. Now question number 53. Try solving.
Hello. It's currently 9:28 a.m.
Now, this is again one question where many of you get stuck. Now, the K is equal to D0 into 1 plus G whole divided by P0 plus G. Now, how to solve here? D0 is not there, P0 is not there. How do we navigate now? This particular portion, this divided by this. What is it? Share price divided by dividend divided by share price. And that's nothing D0 divided by P0 into 1 plus G plus G. Can I write it like this? And this portion is dividend yield into 1 plus G plus G. The dividend yield is given like this 0.048 into the growth that is going to be projected into the future is relevant plus 0.0916. 0.048 into 1.0916 plus 0.0916 will give me how much? Will give me 14.399 percentage, and that's 14.4 percentage. It is B. Slightly tricky one, but a very good question here. Moving on to you can take a screenshot. Happy to see that there are many out there who've got this question. Now, moving on to a question that is based on the beta asset, beta equity, where you've got to ungear, assume that it is same, then regear, and then find out KE based on it. Get the new beta equity, and based on that, you need to find out KE. Can I have you to solve this one? Oh, very good question as far as beta asset, beta equity is concerned. Hurry up, hurry up. So for those who want the formula, you forgot the formula here. Beta asset is equal to beta equity into value of equity divided by value of equity plus value of debt into 1 minus tax. And beta equity is equal to beta asset into value of equity plus value of debt into 1 minus tax divided by value of equity. This is called as the ungeared beta. This is called as the geared beta. Come on, substitute this and try solving. And using the new geared beta in the CAPM, we will substitute RF plus beta into R minus R. Go ahead, try solving it. Looking forward for answer from many of you. The answer is not D. There are some of you send across D. No, it is not D. Now here, this alpha company is entering into unrelated industry. So we cannot start with alpha beta equity. We will have to start with horizon beta equity, which is 1.24. From this, we are finding out beta asset of the pharma, 1.24 into what is the mix? The mix is going to be 3 divided by 3 plus 1 into 1 minus 0.30. So 1.24 into 3 divided by 3.7, which will give me 1. Taking this 1 over here, beta set is 1. Regearing to get the new beta equity, which is 1 into the mix in that industry is 4 plus 1 into 1 minus 0.30 divided by 4. And that give me, what is it, 1.175. Taking that in CAPM is equal to RF, which is 6 plus 1.175 into 14 minus 6. So 14 minus 6 into 1.175 plus 6 will give me 15.4. The answer is B. You can take a screenshot. Moving on to the next question here, please try solving this one. Okay, now here in this, the Miller or model, the spread, what is the formula of the spread? Yes, the spread is available in the formula sheet, but I'll still recommend you to, learn it. So transaction cost into variance divided by the interest to the power 1 by 3. So here it is 3 into 3 by 4 into the transaction cost, which is 25. The variance of the daily cash flow is 2 million divided by it is 0.025 is wrong. Why it is 0.025 percentage divided by 100 will give me 0.0002. So that zero is one point where I've seen some of you make the mistake to the power 1 by 3. So this should be your spread. And now how to do it on a spreadsheet? How to solve this on a spreadsheet? So here, three, many of you forget the into sign, into 25 into 2 million divided by 0.00025 to the power. What to the power? You've got to remember the power is supposed to be within the bracket. So 15939. And that tends to be, yes, 939. It is option number A. Option A. Good, very good, very good. Some of you are really quick, really great. Yeah. Moving on to question number 56. Be very careful with this. Here the g is equal to the nth root of d0 divided by dn minus 1, where it is the fifth root of 13,117 divided by 7,500 minus 1. This one is wrong. Why is this wrong? This is one of the biggest mistake that is done by many. Why is it wrong? Why is it wrong means what you need to understand here is between 0, 1, 2, 3, 4, 5. Please note between 1 and 5, there is only 4 years. Do excuse, it got closed. Reloading, just give me a second. Yes, once again, welcome back. Here we are with that question. And this is based on the concept that G is equal to the nth root of D0 divided by Dn minus 1 and the fifth root of 13,117 divided by 7,500 minus 1 is wrong. Why? Between 0, 1, 2, 3, 4, 5, between 1 and year 5, we actually do not have, we between this, we only have 4 years. We only have 5 years between 0 and 5, we have got 5 years. So this is not the fifth root, it is supposed to be the fourth root. It is supposed to be the fourth root. So be very careful what you take it as a root. And here it will be 14.99 percentage, which can be rounded off to the 15th percentage. It is C. Moving on to question number 57. Moving on to question number 57. The next question. When can an increase in financial gearing result in increase in EPS? A very wonderful question. Four options. Good. Now, pick your option. Let's say, for example, a debt cost 10%. Okay. And the business makes a returns of 8%. So debt you've got to pay 10, but the business is not making sufficient to pay. What will happen? The profit in the business will go down, the EPS will go down. But on the other hand, if the debt is paying 10 and the business is making business returns is very good, it is making 15%. That surplus after paying for the debt, it will be there in the company even after paying the debt. And what will happen? This is going to increase the EPS. So this business return is nothing but the ROI, return on the investment is supposed to exceed this, the requirement here, interest on the debt is here. So what is the right answer? The right answer is here. Sometimes you can expect very generic questions like this. You might feel it to be very general. It is actually not general. It's the basic concept of doing any business. Question number 58. Based on the market efficiency, efficient market hypothesis. So here, when it decided and when it announced, it is announcing today, it decided yesterday, but the impact was yesterday itself. That is, yesterday when it decided, it was an insider knowledge or expert knowledge. And yesterday itself, if it is impacted, it is, what is it? Strong form of efficiency. Today, if it is impacted, then it is, what is it? Semi-strong. It's impacting yesterday itself. Yesterday, that information, when it was decided, it was considered as an insider information. Yesterday itself, the share price is increased. Yes, what is it? It is strong form of efficiency. If it is increasing today, then it is semi-strong. Now, question number 59. Okay, now with regards to this topic, here giving you the summary of this, what you need to understand is that there are three forms of efficiency. There is weak, which only reflects the past. And then we've got semi-strong, which reflects the past as well as the public knowledge. And then we've got the strong, which reflects past plus public plus insider or the expert knowledge. Insider or there is the expert knowledge. Now, sometimes the question is not based on what is reflecting right here. It might be what is not reflecting. Such questions are also there. Next one. One mark your option. Scrip issue is the bonus, okay. And then we have, what is it? Stock split. Equity, share capital, reserves and surplus, and then we've got debt. Equity, share capital, reserves and surplus and debt. Here in scrip issue, the reserves, they are converted like this. Here what happens is that maybe a 10 rupee share becomes 5 rupee, 5 rupee, the face value splits. So scrip issue converts equity reserves to share capital, yes, correct. Whereas the stock split leaves reserves, yeah, nothing happens to the reserves. So what is this? This one is true. This one is true. Question number 60. The operational gearing. Now, if you don't remember, the formula is contribution divided by PBIT. So here sales minus variable costs. Sales is 10,123 minus 5055. One more variable cost, which is minus 100. So 10,123 minus 5055 minus 100 will give me 4968. This is contribution divided by PBIT. PBIT, which is 1902. 4968 divided by 1902 will give me 2.61, and it is C option. Hats off to all those who got the answers right. Okay, what is stock split? Stock split is where one share, it breaks into several shares. Maybe sometimes, what is it? 110 rupee share, 110 rupee share becomes, what is it? 10 shares of rupees 1. Okay, 10 shares of rupees 1. So it is where the nominal value 10 shares of OP1 or maybe 2 shares of 5. So this is where stock split is where the nominal value breaks into pieces. Why is that done? That is done to increase the marketability of the share. That is done to have more shares, more number of shares, making the share price cheaper, increasing the marketability, more people to participate in it. Okay, now we are done with 60 questions, and here a small corporate logo. Let's have a look. Yeah, unmute and tell me which one it is. Unmute and let me know which one it is. Okay.
Don't.
I could not hear you.
Oracle.
Yes, wonderful. Oracle. What is Oracle known for? Oracle, unlike SAP, Oracle, I've worked on Oracle. Like SAP, it is a more budget one. There are many companies who cannot afford SAP can probably afford Oracle. Oracle is into this hardware and software segment. They consider to be slightly more budget than SAP. Okay, so it's an American multinational company that specializes into computer hardware and software products. They are especially into the database management. They are into ERP. Now, which one is this one? A very simple one, huh? A very common FMCG. Come on. My goodness, nobody's able to guess.
Ariel.
Yes, this is Ariel. Ariel is owned by a big business giant called as Procter and Gamble. And this was the first detergent who actually made up enzymes. What enzymes? What is it? Stain moving enzymes. They invented something called stain moving enzymes. Now today, all the detergents have that stain removing enzymes. So this is a laundry detergent company owned by Procter and Gamble, and they are the first detergents in 1967. They've made detergents which have got that stain removing property. Now the next one. Yeah, I'll come back to that point.
Hi.
Yeah, no. This is Cadillac. This is Cadillac. So Cadillac is the American luxury vehicle segment which is owned by GM Motors, and it's known for its luxury and stylish one is gigantic presence on the road. And here the last one, yep, before we move on to the next set of questions.
Sort?
Yes, this is the sort. The sort is the luxury segment of Swiss watches, especially the Swatch. Its luxury segment is the Tissot. So it's a Swiss manufacturing company. It is part of the Swatch. What is it? The Swatch Group, the world's largest manufacturer and distributor of watches. Now moving on to our question number 61. And yeah, before question number 61, there is a request to go through a couple of things, and let me have my scribbling screen on. Give me a second. Now, a couple of things, especially things like what is scrip issue, what is scrip dividend, what is stock split, what is share repurchase, what is a rights issue. These 5 essential things These five essential things. What is it? Scrip issue, scrip dividend, stock split, share repurchase, rights issue. You need to have very good conceptual understanding of all of these five. Because this is where we phrase a lot of MCQs, especially with regards to what are these? Are they going to, we need to know a couple of things like what are these? Okay. Are they going to, what will happen to the number of shares? Is it going to increase or decrease? What is going to happen to the EPS? Is the EPS going to increase or decrease? What is happening to, what is going to happening to the gearing? Is it going to increase or decrease? What is going to happen to the reserves in these cases? Is it going to increase or decrease? Is any funds raised? Is any funds raised in any of these? So these are 1, 2, 3, 4, 5, 6, 7. 7 things that you need to know about these 5 things. 7 things that you need to know about these 5 things. Okay, I will give you some time. I'll get back to these, these 5 things, and I'll explain about the 7 things about these 5 things. 5 scenarios such as scrip issue, scrip dividend, stock split, share repurchase, rights issue. Before I get back into that, I want you to, if at all you get gap in between the question, I want you to Google, I want you to look, and I want you to write about these 5 things, 5 different scenarios, all these 7 questions of mine, try answering. So I'm going to be, I'm going to be taking scrip issue, and I am going to be, I'm going to be telling you, okay, what is this? This one is bonus. This is given free. Is the number of shares? Yes, the number of shares is increasing. The EPS will decrease. The gearing will decrease. No, gearing will be no change in gearing, no change in gearing. Why no change in gearing? You look into it. The reserves shall reduce. No funds. Like this, I want you to answer to all these 5 scenarios. Before I get back, okay, let me move on with the further questions, and I'll get back to it. And here we are with question number 61. A very wonderful question. I can tell you the market value of the debentures is nothing but present value of the cash flows. So precisely, maybe what is it? The year 1 to n years, and the nth year we are looking forward for what particulars? We're looking forward for the interest, the redemption value, or the conversion value. Get those cash flows discounted at the appropriate rate, discounted cash flow. Get the present value. That present value is supposed to market value of the debentures. So try solving. Hurry up, speed up. Looking forward for the answers in the chat box. Okay, now here the period, it's actually not year here. That is one thing you need to take care. And it's the compounding is done in quarter. So I'll probably instead of writing a quarter, I would prefer to write it as period. So today is 20, what is it, 31st December. So I have 20, I have, what are the years I have? 2006, there is no quarter, okay. 2007, 2008, 2009, and 2010, it is 30th June. Until 30th June, there are two quarters. Here, there is four, and the total is 14 quarters. So it is going to be 1:14 and the 14th year. 14th year, what is the redemption value? 115,000. And here it is going to be 10% of this one. That is 10% of 100,000 divided by, that will be 10,000 divided by 4, which will give me 2,500. And this is 0.577. 1 divided by, which percentage should I take? I should take 4%. So 1 divided by 1.44, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. And this will be 10.563. So 10.563, 10.563 into 2,500 will give me 26,407.5. Then 1,15,000 into 0.577 will give me 66,355. And the total will be 92,762. And the nearest is this one. Which one it is? It is A. So this is how this question would come up. Same concept, only difference is it is given in quarters, and when it is given in quarters, be very careful of what not going wrong. Many of you have gone wrong in counting the number of quarters. You understood it is in quarters, but your quarter calculation has gone wrong. And quarterly given interest, you cannot calculate per year. The answer will not come correct. Moving on to question number 62. And here it is a very good question on 2 year for the first year question in Forex. A very good question. Try solving it. Hurry up. I'm looking forward for the answers in the chat. Now, here in this question, something very important in this question is, so what many people do here is 2 years, okay? And what is the exchange rate? The exchange rate tends to be rupee 80 per pound. And the forward exchange is supposed to be based on interest. So what they do is that 1.2 to the power of 2 divided by 1.09 to the power of 2. So this is what many people do into 1.02 into 1.02 divided by 1.09 divided by 1.09. And they get what is it? Rupee 70.05 per pound. And this answer is wrong. Why is this wrong? You've got to be very careful when you read the question here. This is, see, read the question. Home currency of GBP is sterling. Okay. And it trades with a foreign country whose home currency is rupee. This foreign country, this is rupee. This home country is pound. It is not our home country. In the question, the home country is pound. So this actually is the pound rate and this one is the rupee rate. So here on the numerator, I'm supposed to have the rupee rate, which is 9% to the power of 2. And here the pound, which is 2 to the power of 2. So this is where many of you have gone wrong. And the right answer here is rupee 91.35 or 36 per pound. And it is A, it is not C. So be very, very, very careful when you read the question. I've got a lot of answers, but the bad thing is that what is it? Many of you have gone wrong. Oversight, you've made mistakes. Good. And yeah, little more people, be a little more energetic. Give me that energy to do the next questions, yeah. Some of you are, yeah, not responding, just watching. There are many out of you there. Try aggressively, try watching, try start, try solving it. And the next one is on money market hedging. A very wonderful question on money market hedging. So try solving here. This is what do we have? We have 6 month receipt. And what do we do in the receipt? In the foreign country loan, home country deposit. I repeat, in the foreign it is going to be loan, and the home it is going to be deposit. Try solving. Okay, now here this question. This is one area where some of you take a little while to solve. So I've given you sufficient time. The home where the currency is, whose home currency is dollar. Okay, we expect to receive foreign, which is pesos. I'll mark it as P. Actually, not now, when in 6 months' time. In 6 months' time, how much pesos? 500,000 pesos we will receive. So here we need to borrow in the foreign and deposit in the dollar. So deposit in dollar, which tends to be 3%. Borrow in pesos, which is 8%. So it's going to be 8 divided by 2, which is going to be 4%. And here it is going to be 1.5 into 6 months. So how 8 divided by 12 into 6. Okay. Now, please note the exchange rate is not going to be the 6 month forward. It's going to be a spot rate. That is one mistake which I see many of you have made. And now moving ahead, if this one is the future value, I need to find out the present value here. How much I need to invest? The present value is equal to future value into 1 divided by 1 plus r to the power of n. And what is the r? The r is 4. So here it is going to be 500,000 into, which is going to be 1 divided by 1.04. So 500,000 divided by 1.04 will give me pesos 480,769, and I will divide it by 15. When I divide it by 15, it gives me pound 32,00512. This is 51.28. This is what we'll deposit. And this is after 1 year. This one here, the future value is equal to present value into 1 plus r to the power of n. So that's going to be 1.015. That will give me pound 32,532 rounded off to the nearest hundreds. Will it be 32,500 or will it be 32,600? It's less than 550. So 32,500. The answer is yeah. And all those who got it, hats off. This is one again very sure question that could come in exam. Now, some of you would have learned it in a different way, in a shortcut way. That's basically the same thing. I will show you the shortcut. It's just that I've explained it in detail. So here, how much is the receipt is equal to is the foreign currency. So what is it? 500 million pesos divided by 1 plus what is it? The borrow rate. 1 plus the borrow rate. Okay, borrow rate. And then convert it, and then what is it, into 1.1 plus the deposit rate. So that's basically the same thing that we've done here. Nothing complicated. I've just presented it in the form of a table. Now question number 64. Question number 64. Hurry up, speed up, speed up. So here G is equal to BR. Payout means the other half of B will be, what is it, 70%. So it's going to be 70% into post-tax 15. So 70 into 15, that'll give me 10.5%, and that is option C. Not pre-tax, excuse me, but post-tax. Okay. So of the return or of the profit on the investment, I've already gone through this. Of the investment, we get profit. A portion of this is dividend, which is the payout, and the other portion is retained earnings, which will be, if this one is 30%, this will turn out to be, or B will turn out to be 70%. and the R that is taken as post-tax 15%. So that's how you get it as 70 into 15%, 10.5%. Yep. Whenever more than one dividend is given, you've got to always remember what is it? It's to calculate the growth of the dividend. More than one dividend, it is to calculate growth of dividend. So growth of dividend will be calculated n root of d0 divided by dn minus 1. Find out g. So g is equal to 1, 2, 3, not fourth root. Third root of 0.35 divided by 0.311 minus 1. Okay. So probably using a spreadsheet to calculate this one. So here 0.35 divided by 0.311, isn't it? 0.311 to the power 1 divided by 3 minus 1. So what is it? It's, I can take it as 4%. 4%. So D0 is equal to D0 into 1 plus G whole Ke minus G. So what do we have? 0.35 into 1.04 divided by 0.12 minus 0.04. That'll give me 4.55. The answer is D. The answer is D. Okay. Next question. Go ahead. It is to calculate the WACC. And whenever WACC comes up, I'll always request you to do what thing. Yeah, those columns, the standard columns, fund value, proportion, cost, WACC. Fund value, proportion, cost, WACC. And whenever they will given market value, the book value will be converted to market value. Doing 100 questions is a very big deal, isn't it? I am finding it very difficult. And thanks to all of you sitting along, going with the flow, responding. Hurry up, we do not have all day long. So what do we have? We have got fund value, the proportion, cost, WACC. Ordinary and loan notes. What is the value of the ordinary? 5 divided by 0.5, which is trading at 3. And then we have 7 divided by 100, which is trading at 90. Okay. And this divided by this divided by this. The cost of equity is given as 12%. The cost of KD is not given. So KD is just equal to KD, which is what is the interest rate? 13, which is 13 divided by 13 into 1 minus 0.30, which is going to be divided by 90. It's going to be, so this into this and sum. How much is it? It's 11.7%. 11.7%, which is option number C. Option C. Somebody, if you're writing, yes, please, you can take note. Take a screenshot. Probably no time to write, take a screenshot. Okay, and here we move on to the next question. Question number. Yep, please.
Sir, one doubt. Are we not considering the reserves?
Okay, that's a very good question here. Let me tell you one thing. Suppose whenever we do it as per market value weights, we do not consider reserves. So I'll get back here and I'll show you the same question. So this is WACC as per, what is it, market value weights. Suppose if I'm calculating the WACC as per book value weights, how am I going to do that? When I'm going to calculate it as per the book value weights, what I'm going to do is I will take reserves. So here reserves are taken, and whatever is the balance sheet figure, such as what do we have? We have 5, we have 20, and this is going to be 7. Okay, and the proportion will become this divided by this divided by this, and here this divided by this. The proportion is supposed to be 1. Yes, it is. The cost is 12, and this remains 12. And here the cost is this one. Now this, and what happens now? What is the WACC? The WACC is 11.5 or 9%. So whenever we calculate as per book value weights, we will take reserves. Sir, why you are not taking a market value weights? Are here this ordinary shares which is worth 5? I've taken it here as 30. Look in the market value weights, it is taken as 30. That 30 is a consideration for the reserves as well. So whenever you divide it by the nominal value multiplied by market price, we assume when we buy something for the market value, it includes a compensation for the reserves. Reserves need not be considered separately. And that is one of the very favorite examiners question, where at times you are asked to calculate WACC as per book value and market value. And when you calculate as per market value, do not take reserves. When you calculate as per book value, take reserves. Okay, hope that cleared your doubt. And I think I want you to do a question. You can probably refer a question which is called TINIP. Let me just cross check. I think that question is called TINIP. I want you to go do that question sometime. Yeah, it's called TINIP. TINEP. Do a question that's called TINIP. It must be there in the kit. Okay, BPP kit. Try solving that question and practice that requirement A of that question called TINIP. Yep. Hope that cleared your doubt. Now moving to the next one. Yeah, welcome. Hurry up, speed up. AB is 8 divided by 0.30 is wrong. Okay. So there are 8 into 1 minus 0.30 divided by 0.30 wrong. It is 8 percentage of, so it's going to be 0.04 divided by 0.30. This is also wrong. Why? This 30 is condividend. So how do I do it? It is 0.04 divided by 0.30 minus 0.04. So that's 0.04 divided by 0.26. 0.04 divided by 0.26. And that gives me 15.38 percentage. And that's 15.4 percentage. What is the answer? The answer is B. What is the answer? The answer is B. Okay. Very good question, in fact. Yeah. Let's take any two, okay? It's square box. Square box in exam always means select any two. Starts. Okay, thank you for being on hold, yes. The gearing and the weighted average, which two of the following might explain this? So that is, it says that, let's say if I draw a graph, and if one is gearing and the other one is cost, increased gearing, its weighted average cost of capital reduced. So we have traditional theory, we have got Modigliani Miller without tax, and we've got what is it, Modigliani Miller with tax. Okay. Now here, in traditional theory, what happens? The WACC initially reduces, then it increases. Here it remains constant. Here with tax, KO decreases. So in two things where one traditional it reduces and Modigliani Miller with tax it reduces. So two answers is with tax and traditional. So these are the two theories that explains that the WACC will reduce. These are the two theories that actually explains that the WACC would reduce. Now moving on to question number, again one more connected question, 69. Every topic, each and every nook and corner in the 100, I've handpicked the questions. A lot of effort has gone in choosing these questions where you guys go wrong. And many of these are doubts that are sent across by students to me. Now, direct theory believes there's an optimal. Optimal is in what is a traditional theory. And direct theory does not believe that the gearing decision affects the value of the business. Gearing does not affect it. It's always a straight line stated by Modigliani Miller with no tax. So this one is, what is it? The answer is B. What is it? Answer is B. Those whose concept is strong, they'll be able to respond to this really quick. And the next one, a very good question, the next one. Hurry up, choose one. So, which of the following tasks would typically be carried out by a member of what is it, financial management team? Overtime is actually, dealt in management accounting, that is your F2 or your MA. Depreciation is done by financial accountant, and apportioning overhead is also done by management accountant. Proposed expansion plan is FM. So here, which one is it? It is A, evaluating a proposed plan. Now, we've done 20 questions. We started from 50. Now we are at 70. Another 30 more questions. So let's take a small, which one is this? I want you to unmute and tell me which logo this one. To which brand does it relate?
Disney.
Yeah, Disney. It's one of the biggest studios as far as Hollywood is concerned. So based out in Hollywood, the biggest American mass media company. And then this one, slightly difficult maybe for some of you, not that easy like Disney. Yeah, always easy is not nice, isn't it? Come on, which one is this?
AMD ആണോ?
Yes, wonderful. The only competitor for Intel in the market, the only competitor for semiconductors or processors, which is AMD. So American based out, American multinational semiconductor company based out in California, the only rival for Intel in the market. Now, next one. Which one? This is that difficult. There's so many fans out to be supposed to be there for this particular brand. Yep, this is none other than Bacardi. They're the largest, one of the largest family-owned spirit company, and they have around 200 labels and brands under this brand. Okay. Now, the last one before we move on to 71. Yep.
Barbie.
Even this one stuck. Could not hear you. Think somebody spoke, but not loud enough. Yeah, this is an American doll company, a toy company, the only company that has got maximum, only toy that has got a lot of lawsuits filed against its, yeah, because of its lifestyle, the doll. It's an American toy company which was established in 1959, and this is the one of the doll that has got the largest number of lawsuits. Now, question number 71. Yep. Come on. We have a couple of theory in this particular block. Come on, speed up. Let's slightly pick up the momentum. Pick. Whenever the interest is, it's saying low. If it is interest is high, what will happen? Deposits will increase. Many people from other currencies will come. And what is it? There will be appreciation of exchange rate. Many people will buy the currency. Demand for the currency demand will increase. So, but on the other hand, when the interest rate is high, what is it? Many people go outside their deposit. What will happen? Deposits will be less. There will be weaker. There will be depreciate of the exchange. The exchange rate will go down, and the demand for currency will also go down. So this actually reduces the demand for the currency, which is C. This is how you need to know economics, and the only way you become stronger is reading the question, reading the study text, especially the old study text is what I'll recommend you to read to have good understanding about the economics. Next one. People had a feeling, where is the theory? Don't worry, theory is coming up. So this is about the centralized treasury department. What do you think is the advantage? So yes, hurry up. Now there are two types of treasury. One is centralized, decentralized. Decentralized is where all the freedom is given to the branch or the subsidiary as such. No control is there from the head office. So what happens is that more freedom is given, more wider source of places of finance comes up, and whatever is required for that branch or unit is done really quick. So this speaks about decentralized. The responsiveness is also decentralized. Greater autonomy is decentralized. Borrowing can be earned. Bulk is benefit of the central. This is the benefit of the centralized. So here it is. What is the answer? The answer is C. What is the answer? The answer is C. Okay. Moving on to question number 73. The firm's working capital can be reduced by increasing accounts receivable, will increase working capital. Buying new plant and machinery has got nothing to do with working capital. It's non-current asset. Using Miller Road model is only about arranging cash, when to arrange cash, and just in time is where the inventory will reduce. So what happens? The working capital will also reduce. The answer is about adapting just in time. Moving on to the next question, which is yes, to find out the financial gearing, and the question itself is telling you how it has to be calculated as debt divided by debt plus equity using market value weights. Using market value weights. Priya, speed up. And whenever you send your answers, instead of sending A, B, C, D, type what that answer is. That is what I'll recommend. Okay. And mark your answers whether these are right, wrong. Now here the financial gearing is debt. How do I get the debt? That is 500 divided by 100 into 125, which gives me 625. And the equity, which is 100 divided by 1 into 5.5, which gives me 550. So it is 625 divided by 625 plus 550. So 625 plus 550 will give me 625 divided by 1175. 625 divided by 1175 will give me 53.19%. It is D. Okay, now moving on to question number 75. Okay, now let's have a look here. ABCD as in AB company has an interest cover greater than 1. What is interest cover? Interest cover is PBIT divided by interest. Okay. And gearing of what is it? The debt divided by debt plus equity is 50%. Okay. Is 50%. Now, what will be the impact on interest cover and gearing if it repays half of its debt? Now here, PBIT. So half of its debt, what will happen? The interest will reduce. So the interest will reduce, PBIT will remain constant. So this will rise. And what will happen is that the gearing, the debt will reduce. What will happen? The gearing will fall. So we have one rise and a fall. So it is B. The answer is B. Moving on to question number 76, which is indifference point. There is a tool which is called as indifference, PBIT minus I1 into 1 minus T divided by S1 is equal to PBIT minus I2 into 1 minus T divided by S2. Try solving this, substitute and try solving this. So this new share plus the old plus new shares, I'll substitute it here. Then the other half, which is this share plus this debt, I'll substitute it over here. Try solving. Now, here. So here it turns out to be PVAT is constant. The interest is 0 in the first one. 1 minus 0.40 divided by 1000 plus 50. And here the other half, the green one, tends to be PBAT minus 20 into 1 minus 0.40 divided by 1000 plus 0. Now, if I start cancelling them and simplifying them, this will turn out to be PBAT. I can cancel this and this and become 1050. This will be PBAT minus 20 divided by 1000. Okay. This will be 1. This is 1.05. It will turn out to be, if I cross multiply, it will be PBIT is equal to 1.05 PBIT minus 21.05 PBIT is equal to 21. PBIT is equal to 21 divided by 0.05, which is 420. The answer is B. The answer is B. Okay, moving on to the next question, a very good question, in fact. Try solving this where you are supposed to find out the present value. Try solving this. So here, let's find out the present value. What do we have? Here 0, 1, 2. Okay, what is the cash flow? In the company is considering 2-year investment machine setup, 1,25,000. I believe the spreadsheet is visible. And working capital is required at the beginning of the contract, 4,000 will be released at the end. So one more 0, 1. How much is it? 4,000 will be released at the end to 4,000. The cost of capital is 10%. Now discount factor at the rate of 10%. So that's 1.1 to the discounted cash flow. Now this is the present value, which is, what is it? 1,25,000. Now this one is not what the requirement, 1,25,000. No. They are asking what is the minimum acceptable contract price to be received at the end of the contract. End of the contract means it is not year 0, but they are asking what is it year 2. So whatever present value I found out, I need to compound it for 2 years. You have to be very careful at requirements like this. Now, how do I compound it for 2 years? Here into 1.1 to the power of 2 will give me 152,090. So which one is it? 152,090. It is option C. Yes. This is how sometimes a question will come. It's not always present value. But to be very careful. There are many who gave me the answer 126. See, you when you are not careful, this is how you will get stuck. 90% of people gave me the answer as 126, which is not the right answer. So be very careful about what the requirement is. Yeah, there's a request to show question 75. Yeah, I'll definitely go back to 75 to take a screenshot. I just saw that message. Yep, take a screenshot. Okay, now moving ahead. Oops. Yeah, question number 78. Solve a basic accounting question. Now here what we need to understand is that the opening balance or otherwise the purchase of the asset, how much is it? It was purchased for 20,000. Less depreciation. How much is depreciation? 17,000. When I depreciate, I'll get closing book value of an asset, CL, closing book value, okay? Closing book value, which will turn out to be 3,000. This asset is sold for how much? 5,000, which means there is a profit on sale of how much? 2,000. On this profit, what do I have? I have tax expense on profit, which is going to be 30%, which is 600. And it is expense. What is it? It is an outflow. So it turns out to be B. Basic accounting, selling an asset, how much is the gain on it? That's it. And the tax is calculated on that gain. Okay, question number 79. Okay, here they're asking what is soft capitalization. Soft is because of what is it? The internal reasons is soft. Government may have restriction. This is external. So external tends to be hard. Government may be too risky. This is external. This tends to be hard. Cost is outside our control. It is external. It is hard. Management wish to is internal, and this is considered to be soft. So C is the answer of this question. C is the answer of this question. Now, number 80. Very happy to see that many of you are still sticking on, working, trying to come up with answers. 20 more questions. We are done with the 100 target. Come on, they're asking what is going to be the impact. Good, good, good. Come on. Very energetically respond to the chat box. Great, great, wonderful. So let's see here. With the corporation tax, perfect capital market. This is Modigliani-Miller's theory. Okay. Modigliani-Miller's theory with the tax is where KE increases in order to compensate financial risk. KD remains a straight line. Why? It is considered to be debt is considered to be risk-free because of arbitrage. And WACC because debt, when you increase debt, interest will increase, profit will decrease, and tax will decrease because of tax savings. What happens? KO WACC also decreases. So what happens? WACC decreases. So which correctly describes has increasing amount of debt. What happens? The cost of equity increases. So it could be this or this. Then what happens to the WACC? WACC decreases. And whenever WACC decreases, the present value, whenever WACC decreases, the present value increase. And what happens? The value of market value will also increase. And this tends to be C. And this tends to be C. These are very wonderful application of the concepts. This is the level with which you should master the topic. Now, yep, we've done with 80 questions. Yep. Which logo is this one? Another 20 more. Which logo is this one? Yep. Come on, no, not through the chat box. Unmute and have that confidence at least, or huh? Yeah. Good. It's none other than it's a company that is into hardware. It is into electronics. And this company is none other than Bosch. It's a German company which is into a lot of engineering products and electronic products. And this was one of its first products, component of a machine, and that's how it became its logo. And now this one, the next one.
Brother.
Yes, brother. What is brother? Brother is known into fax machine printers. They are into a lot of typewriters in previously. So this is considered as a multifunctional, centers, which is into multifunctional centers such as printers, 5-in-1 modems, and etc. Today, most of the more than HP in the market, brother is a very good quality product that you can, once you start an office or you are what you're going to see in your office. Now, the next one. Yeah, it's Castrol. Castrol is belongs to the BP British Petroleum. They are known for automobile lubricants, oil, greases, and a lot of such products that are required for the automobile range. Even though it's part of even though it's a part of British Petroleum, it has maintained a separate identity, Castrol as such. This one, before we move into the 81st question. No, this is not Subway. It's a fashion brand, a very expensive fashion brand, and it's actually the logo is two C's in opposite direction. That's how the full logo is.
Channel.
Yes, it is Chanel. It's a French fashion house. They're into a lot of luxury goods and fashion accessories. And then our question number 81, here we are in question number 81. Yes, please, go ahead. Okay, now, for a given level of activity of the firm's variable ratio, so what is happening? Variable ratio to fixed ratio. See, I'll tell you, financial risk is based on interest, okay? The debt, that is interest. And operating risk is based on the other fixed cost. So here, variable cost to fixed ratio were to fall. That means the variable cost is reducing and the fixed cost is increasing, which means this operating risk will increase. What is the impact of this? The operating risk will increase. And here the debt equity ratio is to fall means the debt reduce, the financial risk will reduce. So here it could be this and this, and here increase. So what is the answer? The answer is C. The answer is C. You can probably take a screenshot. Now moving on to question number 82.
Sir, sorry, I couldn't take the screenshot. Can you just go and
No, definitely. Got it? Okay.
Yes, sir.
Now, yep. The next question, 82. Now here, this P ratio is based on expectation, and this is based on actual results. So that's something you need to understand. So poorer results, okay, this is poorer results. So what happens? The result lower dividends. So lower dividend than last year, than what is it last? Will obviously reduce dividend. So that could be dividend yield, could be these two. Okay, dividend. But what is it? But these aren't as bad as they were expecting. So as per expectation, it could be increase. So which one it is? Here it is B. The P ratio increases because it is better than expectation. Dividend yield is based on actual results. So compared on to the past result, it is much better. Say past result is bad. The actual result is bad. So therefore, the dividend yield decreases. The P ratio will increase. Now next one. Okay, tax exhaustion means the point where There is no profit at all for, if there is profit, then only we have tax savings. Isn't it? So deduction have reduced tax payable to zero. Further deductions will not save taxes. Okay. I generally would prefer to call it a point where interest is greater than profit. There is no profit at all. There is no profit and hence no tax savings. So this is how I would put it across. Question number 84. Okay. Which one is financial objective? Okay. Financial objective means dealing honestly. This is not a financial objective. Okay. Honestly is maybe non-financial objectives. Okay. Provision of good working condition is non-financial objective. Providing environment friendly is non-financial objective. Restricting and clearing the debt, that is a financial objective. So what is the answer? The answer is D. The answer is D. Moving on to question number 85. Yes, this particular lot, we have a couple of theory. And then, yes, we are at the last phase. We have a couple of problems as well. Hurry up. We need to drastically speed up. Least likely to fall within financial management objective. Dividend payment increased. Yeah, least likely. So this has got something to do with financial management. Funds are raised, financial objectives, surplus sold off. Non-financial objectives are appointed. No, that is not part of, yes. It is, we've learned that in FM, but not main part of what is it, FM. So non-executive directors are appointed to the remuneration committee. Yep. Next one. Market option. So the weak reflects only the past. Here semi-strong reflects past plus the public. Here strong reflects past plus public plus the expert or the insider. Now strong does not reflect any, there is nothing that is not reflected. Everything is reflected. Semi does not reflect what is it, the insider knowledge. Now weak does not reflect two things. It doesn't reflect public and insider. Public and insider is not reflected in the week. Okay. What is reflected? Only past. So investable basis is investment decision on information gathered from published. Okay, from published, that is the public. And comments, statements and comments on plan, company, plans and performance is acting as if we believe the maximum level of efficiency. So based on that, he's taking his decision. That is the publish is not reflecting. Where is it not reflecting? Where is the public not reflecting? Public is not reflecting. Only over here it is not reflecting. He assumes a market to be, what is it to be? This is how they generally sometimes ask like this. So if he has to make a gain with the public, he cannot make a gain in semi-strong because in semi-strong, the public is immediately reflecting. It is really quick. It is really fast. Here, these will reflect what is it immediately. And here it will randomly and slowly, I could say. So this one is not reflected at all. So based on this, so I can make money with insider knowledge in two markets, weak and semi-strong. Insider, I can make money in two different markets. Okay, so you can see a similar question like this. Wherein there's a question in the kit which you will see similar confusing when you read that you think that the kit has gone wrong. No, kit has not gone wrong. The problem is with your understanding. It is not the kit that has gone wrong. Okay. The zero efficiency is where nothing is reflecting. Even the past will not reflect. It's not bothered about the information at all. It is not bothered about the information at all. There's a request to take the picture of the previous one. Okay. Yeah. Ma'am, this is all not a very high level question. It's a very basic level of question. 85. Okay. Now moving to 87. Again, quite very, very basic things, which I feel bad because many of you are going wrong. Which of the following is a disadvantage of a company using factor? Paying directly to the factor. Why? It creates a negative image. It creates a negative image that the company is badly in need of money. It was one of the greatest disadvantage. All the others are all the others are what is it? Advantages. Next one. Overtrading is likely to be caused by which increase in profit, increase in turn ratio, rapid increase in sales, decrease in the level of inventory. There is rapid increase in the sales, but accordingly, we don't have sufficient working capital. So what is it? The answer is C. If your answer is right, put a tick mark. If your answer is wrong, put a cross mark. Okay. Now question number 89. You shouldn't go wrong here. So short-term deficit means you're supposed to play with working capital. Working capital things is where you will help you solve short-term deficit. So I need to reduce my accounts receivable. Now, please understand there are two situations as far as cash position is concerned. One which could be a surplus, the other one which could be a deficit. Now, again, in the surplus, watch very carefully. There could be short-term surplus, there could be long-term surplus. Deficit could be short-term deficit, there could be long-term deficit. Okay, now what do you do in what is it? Surplus, short-term surplus. You do short-term investments. You try to increase average accounts receivable. You try to increase working capital. You try to give, maybe do early settlement and so on. Long term, maybe you can expand, you can diversify, you can maybe get new non-current asset. Short-term deficit is where you try to, you reduce average accounts receivable, you reduce inventory, you reduce working capital, you take maybe OD and so on. Long-term deficit, you've got to go for equity or you've got to go for debt, or maybe you should do disinvestment opportunity. Some part of the business you should probably sell. This chart is very important. Yeah, I've put that chart across on the screen. Take a picture of it. Do not go wrong when you advise. Do not go wrong when you advise. And here, Here you can put maybe one more thing, that is debt as well. Do not go wrong when you advise. This should be your secret to scoring. When they put any of these four options, never ever go wrong. Okay. There are many people who go wrong when it comes to the commenting part. Yep. Now, next one question. So here P0 is equal to I divided by KD, or it is redeemable. So not just, it's supposed to be the present value. It's only 1 year, okay, 1 year's time. So what is the cash flow? It is going to be face value, will be repaid face value and interest. It is going to be 107. 107. Discount factor at 8%. So it's going to be 1 divided by 1.08. 0.926. 0.96 into 107 will give me 99.08, and it is A. Okay. Option is A. So we've successfully done 90 out of 100 questions. So let's have a look. What do we have in the corporate logo? Yeah, which one is it? You are supposed to know it. Something that many of you use very quite often. It's owned by Ferrero. It's an Italian, what do you call it, hard mint company. It's a very small brand. It was first produced in 1969, and it's none other than Tic Tac. It's none other than Tic Tac. Your observation skill and audit. You are being an auditor. The most important thing is to enhance your observation skill. Observation skill is the most important thing. Yeah, which one is this?
Gillette.
It's Gillette. And which brand? Can somebody tell me which brand owns Gillette? Which is this parent company? Big company like Hindustan owns Gillette. Which brand is that? Most of the products, big international products, are owned by this company. And I've already told that company once now. It's none other than Procter and Gamble. They are considered to be the world's biggest FMCG company. And they have got a tagline, the best a man can get. Huh? Good tagline, isn't it? Yes, this one. What is it? They are a competitor for Michelin, Bridgestone. They're more into tires of commercial trucks, SUVs, racing car, farm equipments. And this is none other than Goodyear. This is none other than Goodyear. And the next one, yeah, you come on, tell me what this is. You're looking badly. Yes, I want you to unmute and tell me. Do you know that that's one of your favorite things? Your favorite. There are many of you who are generally very fond of this. No, this is not Haldirams. It's not Haldirams. I can give you a clue. It's food itself, but not Haldirams. And the best quality product. You go to 5-star, you see this on the table. They're actually known as the inventors of ketchup. Their ketchup is the best ketchup. You can see in supermarket when others sell for 50, they'll sell for maybe 200.
Hey.
Price is also high. Yeah, it's none of them. They are into many other products today, but these are originally the Heinz. Okay. They're known for the ketchup, the quality of the ketchup. They're like the inventors of the ketchup. And question number 91. Going to the last 10 questions. And it's a great pleasure. It was really fun, doing these 100 question, reaching the 90, and very good participation. Yes, very few who need to be a little more energetic. Huh? So even though it's being a Sunday this morning, yeah, thank you guys. Yes, now let's keep moving ahead. Let's knock off the rest 10. And I can tell you, I can probably, yes, finish off and close once we are done with this. This is valuation. So here, what I can tell you is that the P0 is equal to the dividend into 1 plus G whole divided by KE minus G. Or may, okay, so what do we have here? 60 million. But sir, is the growth given? Yes, the 60 and G is equal to BR, G is equal to BR. This one is the B, and here we have R. So 60 into 20 percentage, which will give me 12 percentage. So 1.12 divided by 0.22 minus 0.12, that will give me 672, which is D. 672, which is D. Okay. 92, question number 92. Very small trick is here, what we have here. So here the market price per share is equal to P ratio into EPS. Now P ratio is 10. P ratio is 10. Now, based on that, what is it going to be? Is it the current or the forecast? It's going to be based on the current, not the forecast. It is 50. So this is again one place where people think it is 80 and you're right, 80 into 10. So 8 into 10, 80. No, no. It is based on the current APS, not the future APS. Okay. No. Next one. Which of the following is correct? At the end, remind me to speak about those 5 things: the stock splits, the scrip issue, and those things. Please do remind me in case if I forget. Yeah, I'll come back to the 92 to take a picture, no problem. Okay, now, which of the following statement is correct? A bonus issue can be used to raise equity finance? No, you don't raise any funds in the bonus. It is called a scrip issue as well. This is scrip issue. Scrip issue doesn't raise any finance. Share repurchase can increase both EPS and gearing. Yep, that is true. Modi Giuliani will argue that financial decision is more important than dividend decision. No, focus was not on that at all. Shareholders usually have the power to increase dividends. No, they only have power to decrease. So what is the answer? The answer is B. There was a request to show the previous question. Here I go back to the previous question. Yes, please. 92. Hope you have taken a screenshot. Now 93 and all the way to 94. Yes, please. Okay. Which of the following statements are correct? Profit, accounting profit is not same. Yes, this one is true. Profit takes into account risk. Now, can we say that profit takes into account risk? Accounting profit can be manipulated. So here, 1 and 3, profit does not consider risk. Because why? Profit increases. What happens? The risk increases. And the risk beyond certain level is not acceptable. So it is not true. It doesn't consider risk. More risk, more returns. But so when we look into too much profit, the risk keeps increasing, and risk beyond certain level is not acceptable to the shareholders. Question number 95, with regards to the traditional theory. Last 5 more questions. So which regarding to the traditional theory is correct? There must be taxes. There must be a minimum WACC. The cost of equity does not increases as gearing decreases. No, as gearing increases. That is how I corrected. Cost of debt increases as gearing increases. So what is it? It is B. There must be a minimum WACC. What does it say? It is the WACC initially reduces up to an optimal point, after which the WACC starts to rise. The WACC is like that, the shape of a saucer, the cup and saucer is in. So it's called the traditional theory. We say that WACC is in the shape of a saucer. Now here, next one. No. Put option is it a right to buy? No, it is a right to sell. It is a right to sell at a fixed price. What is the answer? The answer is yeah. Now there are people who come and tell me, sir, it is always difficult to remember, sir, we get confused, sir, we go wrong. So if you look at the alphabets, A, B, C, D, E, F, G, then what happens? H, I, J, K, L, M, N, O, P, Q, R, S. Thank you. Now, so here, see the buy, A, B, buy, call. They are always nearby. See, buy, call, they are nearby. Here, put is nearby, S, sell. So, put is nothing but the sell. Okay. The people who find that, sir, call is a buy or sell. Remember the alphabets. These two letters, they are nearby. So A, B, C, D, B is buy. It is nothing but call. P, Q, R, S. What is it? P is put. What is the nearest one? S, S is sell. So that's one way how you can remember it. Okay. For those who it is difficult to remember. I don't go tell anybody else. Sir taught us like this. No. But I can give you one word. You will not forget this example. Now, next one. 97. So what is this fall in a values currency? Something, let's say maybe rupee, it is 50 per dollar USU. What is fall? Fall is what will happen is that it becomes maybe rupee 70 per dollar. So whenever we get more thing, what happens to the export? The exports will rise because we get more money when we sell, isn't it? But at the same time, the things becomes a price increases, because of which, what is it? The inflation, the value of the money reduces. So it is both 1 and 2 is correct. Both 1 and 2 is correct. Now, before I come back, yes, let me deal with this. The scrip dividend. What is scrip dividend? Scrip dividend is where an option is given, whether you want it in the, whether you want, what is it option, whether you want it in the form of cash or cash dividend, or whether you want it in the form of share dividend. What happens is, here is the number of shares, the number of shares they increase. Obviously, the EPS will decrease, and the scrip dividend, generally, if I would have paid dividend, the gearing would have increased. So the general approach that is mentioned is that in scrip dividend, the gearing that was supposed to raise is now reduced, and the reserves here reduces because it is paid out of the reserves is converted into shares, and there is no fund that is raised. There is no fund that is raised. Now, speaking about stock split, this is where if you have equity, share capital, reserves, and surplus, and debt. This is where a rupee 10 share becomes rupee 5 and rupee 5. Okay. So what happens to the number of shares? The number of shares will increase here in the stock split. I hope what I write is visible. Then what will happen? The EPS will reduce, and it is nothing but no change in gearing. No change in gearing because overall equity remains same. No change for reserves, no change in reserves. Any fund raised in stock split? No fund. No fund raised. Okay. Now, share repurchase is buyback. Okay. Buyback, where what happens is the number of shares will reduce, whereby the EPS will increase and the gearing will also increase. And buyback, maybe nothing to comment upon the reserves. There are adjustments that are done, so let's not look into it. And there is no funds raised. Rights issue, yes, funds are raised at discount. Okay, this is issue of shares. Issue of shares at discount. Here the number of shares will increase. The EPS is assumed to decrease. The gearing will number of shares increase, EPS will increase, gearing will reduce. Okay. And rights issue, nothing with regard to the reserves. Okay. So this is those 5 things which you need to know, especially in the aspect of the EPS and the gearing, especially in the aspect of EPS and gearing. Mhm. Okay. Now, let's get back to question number 98. Last 3 questions. When do we use asset-based, or when do we use net realizable values or asset-based valuation method? When our intention is to buy a business, break it down into pieces and sell it off, which is technically called as, what is it? Asset stripping. So this is used in situations of asset stripping, where we buy a business, break it into pieces, we sell its land off separately, machinery separately, equipment separately, like that. You buy a business to break it into pieces and sell it off. Okay, now this is again a very good question we have here. I'm looking forward for some of you to share your experiences of this 100 questions. Yeah, whether I should do it again in the future or not do it in the future, how it has helped you out. Very good question. Looking forward for answer from many of you. There are two ways how you can find this out. One, which is either using market price per share divided by earnings per share, or you can do it instead of that, the market capitalization, the value of the full company divided by total earnings. Okay, so I'm going to do it as per the market capitalization. So here what you need to understand is that 1 for 3. That means 90 divided by 3, it will be 30. So the total number of shares is going to be 430. And it is said that the Peter company share will rise by 50 cents plus 50 cents. The price is going to be $3. Okay. So the market capitalization is going to be 430 into 3, the full value of the company. Now the total earnings is going to be, there's an earnings increase of 4. So plus 35 plus 4. So 120 plus 35 plus 4. The total earnings is going to be 159. So 430 into 3, 430 into 3 divided by 159 will give me $8.113, which is B. How beautiful question, yeah. How beautiful. Hmm? Okay, you can take maybe a picture of screenshot of this. And moving on to the last question. 100 question, a century. Again, yes, what concept? We've done several questions based on the same concept. Maybe at least 2. This is the third question based on the same concept of Gordon's growth. Yep, looking forward for everyone. More energetic out there, come on. So here, the G is equal to BR. This one is R and this one is B. So 40 into 15% will give me 6%. And then the value of the company is equal to the total dividend into 1 plus G whole divided by KE minus G. So it's 200,000 into 1.06. 0.23 minus 0.06. So 12,000 into 1.06. Which will give me, what is it, 1,247,059, and that's supposed to be the nearest, which one is B. And yep, we are done with 100 questions, 100 different questions, 100 different areas, the most tricky ones. And now out of 50, yes, total today's 50 questions. Tell me how much you scored out of today's 50 question. And let's have a look at the last couple set of logos. And I'm looking forward for some of you to tell me how your experience was. Maybe unmute, that will be great. Yes, now, which one is this? Yep. Which one do you think is this one? Yeah, it is a Scottish brand from Scotland. They're known for their, yes, whiskey. They have more than 130 billion bottles sold every year. And this brand is none other than Johnny Walker. 130 million bottles sold every year. Now, which one is this one? Yeah, this is none other than Ericsson. And it's a Swedish, they were in like Nokia before, they were selling more mobile phones like Nokia and Samsung before. They were the first into the telecom and they were doing very good in the telecom. Later, they didn't perform, they didn't come into Android really quick, due to which they got phased out. And this one, again, a very good company at one point of time. Now it is almost getting out of the market. It is no more like, yeah, who can unmute and tell me which brand it is?
Kodak.
Yes, this is none other than Kodak. Now it's an American multinational company which is headed from, yep, it was into photographic and imaging, which company is now like almost no more. And this one,
Lexus.
yes, this one is none other than Lexus, the premium segment of Toyota. Headquarters based at Japan. Next one, two more, and we are going to the ending phase. Which one? This one. Come on. This is one. Slightly tricky, isn't it? It's a very premium chain of hotels.
Marriott.
No, this is not Marriott. Marriott is a name. Very premium chain of 5-star and 7-star hotels. They own a lot of brands as subsidiary of this one. And this is none other than Sheraton. So this is Starwood Hotels, world's largest chain of and the oldest brand after Western brand. And yep, the last one for today. I could not hear it.
Cat?
It's not just cat, it is Caterpillar. This is
Caterpillar.
Caterpillar. Okay, it's called Caterpillar. So they are into a lot of what you know of cat is probably the shoes. No, they are into a lot of other manufacturing, construction, and mining things. That is for the construction purpose, they started making shoes, which is what many people only know. And for the updates, for any further updates, you can stay tuned to my Instagram page and YouTube. There's a YouTube channel where a few videos would be coming up. There's a couple of videos that will be coming up in the YouTube channel, and this is my Instagram. And thank you all. And before I close, is there somebody who can come forward and probably, yep, was I able to make any change? Was I able to contribute something? How was your, I believe there should be some change, because that is the reason why we have so much crowd still hanging on till the end. Yep. So anybody wants to come forward, say something, let me know. Yeah, thank you.
Can I speak in Malayalam?
Yeah, definitely. Go ahead.
ഇപ്പോ ക്ലാസ് ഒരു 100 ക്വസ്റ്റ്യൻ ചെയ്തപ്പോ ഫസ്റ്റ് ഒക്കെ കുറച്ച് നല്ല മൂഡ് പോയെങ്കിലും ലാസ്റ്റിലേക്ക് ആയപ്പോ കുറച്ചൊക്കെ ഫുള്ള് റീക്യാപ്പ് ചെയ്ത് എല്ലാം ഇപ്പോ അടുത്ത ആഴ്ച എക്സാം എഴുതാൻ കുറച്ച് പ്രിപ്പയർഡ് ആയ പോലെ ഫീൽ ആയി. ലാസ്റ്റിലേക്ക് എത്തിയപ്പോ കുറച്ചൊക്കെ ഇപ്പൊ നമ്മൾ മറന്ന ടോപ്പിക്സ് എല്ലാം ഒന്നുകൂടിയും ഓർത്തെടുക്കാൻ ഭയങ്കര ഹെൽപ്ഫുൾ ആയ ഒരു ക്ലാസ് ആയിരുന്നു. ഒരു മൊത്തത്തിൽ പറഞ്ഞു കഴിഞ്ഞാൽ ഏറ്റവും കൂടുതൽ റീക്യാപ്പ് ചെയ്യാനും പെട്ടെന്ന് ഒരു ക്വിക്ക് റിവിഷൻ നടത്താനും ഏറ്റവും ഭയങ്കര ഹെൽപ്ഫുൾ ആയി.
Okay. And I've put a lot of effort to bring this selected questions. I've picked up all those places where you go wrong. There's very few easy ones rather. So I just wanted to ensure that through me, I wanted you to recover those questions. So if at all those concepts are retested, you should be able to score was what my intention is. Yes. Thank you. Thank you, Yasser.
Thank you, sir.
Anybody else wants to speak anything more? Anybody? Thank you for the sweet word, yeah, sir.
Hi, sir.
Nino, tell me, Nino.
Yeah, thank you so much for the session. Actually, it was really helpful for me. Like, I really understood what my level is actually. It is not up to the mark, and I need to work more to get.
You see, if you focus on the right questions, the next 4 days, I think, if you are good in section C, you already know the concept. Next 4 days, keep working. Yeah, I believe if you work, it's still achievable.
Thank you, sir.
Thank you, Nino. Anybody else? There's so many comments in the chat. Okay, thank you, guys.
Hello.
Yes.
Hello, sir. Thank you so much, sir. 100 questions cover ചെയ്തു. അപ്പോ നമുക്ക് ആ ടോപ്പിക്സ് ഒക്കെ ഒന്നുകൂടി റീക്യാപ്പ് ചെയ്യാൻ പറ്റി. സത്യം പറഞ്ഞാൽ ആരും ഇതിങ്ങനെ ചെയ്യില്ല. ബാക്കി ഇൻസ്റ്റിറ്റ്യൂഷൻസ് ഒക്കെ ക്യാഷ് കൊടുത്തിട്ടുള്ളതാണ്. പക്ഷെ സാർ ഫ്രീ ആയിട്ട് നമുക്ക് വേണ്ടി ചെയ്തു തന്നു. വളരെ സന്തോഷം. താങ്ക് യു, സാർ. പിന്നെ സാറിന്റെ ഞാൻ ഓൺലൈൻ ക്ലാസ് എടുത്തിട്ടുണ്ടായിരുന്നു. ഞാൻ ഒരു മെയ് മാസം 2024. അപ്പോ ഞാൻ പിന്നെ ഒരു ബ്രേക്ക് വന്നു. അപ്പോ ഞാൻ പിന്നെ ഇപ്പോഴാണ് എഴുതുന്നത്. അപ്പോ സാർ ഇപ്പോഴും മാർക്കറ്റിംഗ് ടീമിന്റെ പാർട്ടാണോ സാർ? മാർക്കറ്റ് ടീമിന്റെ പാർട്ടാണോ സാർ?
Not marking. I'm part of the question paper. Yeah.
ക്വസ്റ്റ്യൻ ടീം. അപ്പൊ സാർ എന്തെങ്കിലും ടിപ്പ് ആൻഡ് ട്രിക്സ് എന്തെങ്കിലും സാറിനോക്കാം?
See, focus on the theory part. Those theories which are very important, especially like the capital structure theory, the dividend policy theory, the soft capital rationing, hard capital rationing, the risk such as what do you call it, the systematic risk, unsystematic risk. What is factoring? What is the advantage of factoring? What is the disadvantage of factoring? What is overtrading? How do you identify overtrading? How do you solve overtrading? So such theories, please focus on them, time them, practice them. They're very frequently asked such theories. Such theories are quite frequently asked. And whenever that comes in exam, you should not spend a lot of time thinking. It has to reach your question paper really quick. You should be very well prepared with it. And thank you.
Okay, sir.
Yeah.
Thank you so much, sir. സാർ പറഞ്ഞാൽ മറ്റേ 30%, 35% പ്രോബ്ലം, ബാക്കി 65% തിയറി, ആ രീതിയിൽ തന്നെയാണ് പോകേണ്ടത്.
Yeah, you can expect from 60 to 65% as theory, but theory means it is the problem concept that is asked in theory. It is a problem part that would be asked in theory. So those are something that if you know the problem, you will be able to, your concept is clear, you should be able to do the theory.
Okay, sir. Thank you so much.
Welcome. Anybody else coming forward? Okay. I am looking at there is a discussion. There's a request that I missed the first 50. The first 50 yesterday took us more than 4 hours. My back started aching sitting continuously for 4 hours. I am thinking I've got to get maybe the permissions to maybe upload it on maybe the YouTube channel. So maybe not, I'm not giving you a commitment. So let me have a look into it. Let me get the consents, and if possible, you can get it through my YouTube channel. So, yep. Thank you, guys. Thank you. Have a nice day. And those who've attempted this already, I would not request you to again watch the video, waste your, 4 hours yesterday. And today, how much hours did we take? We started at 9, 10, 11, 12, 3. So 4 plus 3, 7.5 hours. Do not waste your 7.5 hours maybe watching this again, even though if I upload it. So only if you have missed it, if you have performed very bad, then only please watch the video, if at all it is uploaded. Okay. So thank you, guys. Wishing you all the best for your upcoming exams. And the hacker group, you can probably use those group for clearing your doubts. You can put across your questions into it. And I will also do one thing. I'll share across a formula sheet which contains all the formulas that you need to be doing as far as FM is concerned. I have consolidated formula sheet which I will share it across in the group. Anybody, anything else more, anything that you want to ask, any assistance that you're looking forward for? I'm supposed to be on vacation, but some students were like, sir, why not? So I thought, yeah, let me try to make some difference. So, yep. Thank you guys. Bye-bye.